Yeah, I think there's like two key dimensions to think about that question. One aligns to Josh's kind of option value hedge, right? But it takes on a little more of like a geopolitical valence, right? Where that unsustainability of our debt creates a kind of geopolitical vulnerability, right? There are many scenarios that you can imagine where we are in a confrontation or a crisis with an adversary like China, and having our balance sheet be that fragile puts us in a relative position of weakness. So anything we can do now to sort of shore up that national balance sheet to create an embedded expectation that mitigates that potential future risk is a net present positive. Then there are more strategic, maybe international benefits for the U.S. adopting a pro Bitcoin position that then reinforces the adoption of Bitcoin around the world in a way that counters China's strategic geoeconomic objectives. So they want to establish their own cross-border, trading and settlement systems that bypass the existing dollar clearing settlement systems. To first order, that's to mitigate their ability to be, sanctioned in the event of a crisis. So they want to have essentially redundant settlement systems that they can still conduct trade with with most of the world essentially, and they are the principal producer of most goods, and they're climbing value chains around the world, and they're finding willing subscribers to a model of kind of digital authoritarianism that goes hand in hand with their increasing trade sort of penetration around the world. So they are exporting not only their goods and services, but also a kind of governance vision that embeds increasingly large swaths of the world into a kind of a techno-authoritarianism stack that includes essentially China's infrastructure, and including digital currency infrastructure. And so the extent that the United States can sort of support the adoption of Bitcoin and dollar-based stablecoins as kind of a synergistic development that is much more aligned to U.S. sort of soft power interests, as well as providing a bulwark against China's attempts to ensnare large portions of the world into their sort of technical stack and their vision of sort of techno-authoritarianism governance. So I think both on the kind of mitigate tail risk and mitigate the sort of acute geostrategic vulnerability that rising debt servicing costs has on our ability to credibly deter and contain China's ambitions, as well as to have a more proactive strategy in reinforcing our liberal values and the positions of individuals around the world that want to save their assets in a currency that is hard for their potentially extractive kleptocratic elite regimes to get their hands on, as well as providing alternative settlement systems that are potentially even dollar based that allow them to escape unstable or repressive financial regimes in those countries. And so this is, I think, the fault lines of the next 5 or 10 years of competition that's going to play out. And the U.S. sort of adopting a pro Bitcoin policy stance with the strategic Bitcoin reserve, I think, will reinforce our interests.
I'll just make one point. Is I think in one sense it kind of provides a permission structure for other countries to do similar things. And I think if you're the United States, one of the things that you're concerned about is the U.S. Treasury is the global reserve asset. And one thing you might be concerned about is that as the United States engages in more sanctions against its adversaries, and as the United States government accumulates more and more debt, countries around the world are going to have an incentive to diversify away from treasuries. And if you're the United States, you don't want them to diversify away from those treasuries into some other sovereign created instrument. So what you would want is them to move to some sort of neutral asset. And that neutral asset, could be something like gold, or it could be something like Bitcoin, where, no sovereign has control over or at least exclusive control over the supply of gold. Sovereigns clearly have no control over the supply of Bitcoin. And so this is a more neutral asset. You would prefer that countries move to a neutral asset rather than to some other sovereign debt instrument or something like that. And so I think from the US's perspective, perhaps this can create a permission structure where people who are considering diversifying actually move towards Bitcoin and not towards empowering some other sovereign.
The one point I'll add on that, if that were the case, if you happen to hold a disproportionate share of Bitcoin relative to those adversaries, then steering that marginal foreign pool of capital in a foreign exchange reserve balance sheet to Bitcoin relative to gold would benefit us relative to, say, China or Iran or Russia.
I'll just add a couple of thoughts on that. So one is that, yes, it is still the case the U.S. dollar is kind of uh, the dominant currency being used all over the world. I mean, 90%, roughly 90% of foreign exchange transactions are have the U.S. dollar on one side of them, and I think it's still like in the upper 50% or so, like 58% of central bank reserves are held in the U.S. dollar assets of some kind, not necessarily U.S. Treasuries, but a mix of other things as well. The data seems to suggest that central banks are diversifying sort of into gold more so than they're diversifying away from U.S. dollars, which is kind of an interesting finding over the last few years. I think a lot of people expected that, let's say, the U.S. sanctions against Russia's reserves might have motivated a larger degree of fright or flight away from the U.S. dollar, and that doesn't seem to have occurred, at least not on a kind of a large scale. I mean, maybe certain countries, of course, that are making individual decisions about their dollars. But the renewed interest by central banks in gold is I think an interesting artifact of the last few years, and so that kind of gets into the question of what can you get with Bitcoin that you don't necessarily get with gold.